Yes, yesterday was fun, but I've been going round town, get it, looking for ways to make some serious cash. So with the small sum of £100,000 in my back pocket, I went for my first meeting with a stockbroker. So what exactly do stockbrokers do?
People will come to us with an amount of money or a portfolio which they have or may have inherited, and we'll discuss with them exactly what the requirements are and decide what shares or even government bonds or fixed interest they should be buying for the long term.
Well, it sounds simple enough. I give them my wad of cash and they decide where to put it. But am I guaranteed to make money? Well, apparently the answer is yes, if I invest in what's called a blue chip company. That's one that's well established and well known for its reliability and consistent payouts of dividends.
Good quality blue chip shares over a long period of time will outperform building society cash, and certainly at the moment when you're getting pittance on your cash balances, I mean, you can invest in government securities, for example, yielding about 4%, in corporate bonds, which is debt issued by good quality companies, yielding maybe 5.5–6%, or even some companies such as Glaxo, which give an income yield of 5.5%, and of course the potential for capital growth over the longer term.
If, say, I had £500 that I wanted to invest, I could potentially invest in one of those blue chips, could I?
You could, and you could also do it via what we call a collective, which is a unit trust or investment trust, which does exactly that. So instead of investing in one company, they'll invest in, say, 50 or 100 companies. So it'll reduce the spread of your risk.
When people play the stock market wanting to make money, to what extent is their success down to luck and to what extent is it down to skill?
Well, I think it depends on yourself. I mean, obviously you can take greater risks in what you do, and we would obviously have to go through with you exactly what your requirements were, not only in terms of capital growth or income, but also your risk profile. And yes, of course, you can make a huge amount of money, for example, in penny shares.
What's that?
It is literally that. It's a share which is maybe priced at 2 or 3p, which has the potential, in inverted commas, to go to maybe 9 or 10p.
And if somebody comes to you and they're wanting to invest a sum of money, to what extent are you responsible for finding out how much they can afford it, whether they're taking too great a risk?
I mean, that's a very good question. I mean, it's paramount. When we sit down with a client, we go through their financial affairs in great detail, exactly what their income is, what their expenditure is, what their assets are, what their liabilities are, and to get a feel of exactly what they're looking for.
So I've got my head round where they might put my money and why, but I've always wanted to know what they get so excited about. 100 years ago, this place would have been teeming with hundreds of men shouting at each other, running around manically. What on earth were they doing?
They would be possibly called blue buttons, and they would be dealing with they were probably called jobbers in those days, now called market makers. And the market makers, or jobbers as I say, were responsible for making prices in different sectors and different stocks. So you'd have maybe a pitch dealing, say, in pharmaceuticals or motors or industrials, and you go around the different pitches and check the prices, and if you order to buy shares, you would deal with the one who was actually offering them the cheapest and selling them the same. You'd sell to the market maker who's giving the best price.
Why were they getting so excited?
I think people get carried away with the excitement, actually. I mean, I did a stint myself, actually, about 20-odd years ago on the London Stock Exchange floor, and the thing that stuck in my mind, that if you remember Guinness, they were bidding for a company called Martin, the newsagent, and the bell rang 3 times, and everybody ran across this floor for the newsagent's pitch, and because they'd increased the offer to buy the company. And it was the kind of thing that stuck in your mind as being dramatic.
So playing the stock market can be a great way to make money, but only if you can afford to take the chance and remain financially secure if your shares go bump. But what about people who can't afford to gamble with their cash but continue to do it anyway?
I've lost girlfriends over it, I've lost homes over it, cause I just didn't bother. I didn't buy food, I didn't pay my bills, I was just gambling all the time.